In this lesson, we are going to focus specifically on tools inside Bookmap that visualize aggressive participation or market orders. Everything we examine here represents urgency in the market. These are the tools that are going to show us who is crossing the spread at what size and with what intensity. They do not show resting liquidity and they do not show unexecuted intent. We will get to those in the next lesson when we go over all the limit order tools inside Bookmap. The market order tools are going to show completed transactions or trades that have already interacted with available liquidity. Now, before we go tool by tool, it's important to anchor this back to Module 1. Markets move when aggressive participation interacts with passive liquidity, and aggression creates pressure, but passivity determines whether that pressure results in continuation, balance, absorption, or rejection. So in this lesson, we are intentionally isolating only the aggressive side of that interaction so that you can clearly recognize what executed urgency looks like on the screen before we later integrate that with resting liquidity. Now, let's begin with volume dots. Volume dots are often referred to as volume bubbles. So each volume bubble represents an executed trade or cluster of trades at a specific price level. These are real market orders that cross the spread and consumed liquidity. Now, the size of the bubble reflects the size of the execution, which allows you to visually distinguish small participation from larger committed aggression very quickly and very easily. So let's go over the settings for volume bubbles. I prefer to use the 3D bubbles rather than the flat dots, but that is just personal preference. Now, under the transparency settings, I like to keep it around the middle of the range, anywhere from 40 to 60%. The transparency is adjusted so that overlapping executions remain visible without creating any clutter. I like to be able to see through the bubbles a little bit so I can see everything else around it and also see the price line underneath it as well. So next we can see the cluster settings of the volume bubbles. Clustering is always set to smart so that related executions are grouped in a way that preserves structural information while reducing unnecessary noise. The goal of these settings is very simple. It's simply to just make aggressive participation readable without distorting it. So I like to keep the setting around 40 to 60%. Basically, what it does is it allows you to see more or less aggregation of these market orders and how they're displayed. So if it's very, very low, you're going to see a ton of bubbles everywhere. And if it's very, very high, you'll see very, very little bubbles. Also, you can see an apply to bars button here. I also click that so I can have the exact same clustering settings applied to the volume bars at the bottom of the screen. Next, we come to some filter settings. Now, these two settings require careful understanding. We have minimal displayed volume and minimal trade size. So in the standard template, both of these are going to be set to 0.3. Now, this value is not universal, but it represents a balance of filtering size. Now, if the threshold is set too low, the chart becomes saturated with very small trades, which introduces a lot of noise and makes meaningful aggression harder to identify. Now, if the threshold is set too high, you filter out early or moderate participation, and you only end up seeing the larger executions after momentum is already underway. So the 0.3 setting preserves the responsiveness while reducing insignificant background activity. So the exact number may change depending on the asset that you're trading, but the principle is always remaining constant. Every filter shapes what you see versus what you ignore. Next, let's move to cumulative volume delta, commonly referred to as CVD. And this is a very popular indicator or tool. Most people already know about CVD, but CVD tracks the net difference between aggressive buying volume and aggressive selling volume over time. Aggressive buying occurs when participants lift the offer, and aggressive selling occurs when participants hit the bid. So CVD simply measures which side has been more urgent during a defined period. It's not a measure of total volume and it's not predicting direction. It's just showing whether net aggression has been buying or selling. So when CVD rises, it's telling us net aggressive buying is dominating here. And when CVD falls, net aggressive selling becomes more dominant. So we can see in the CVD settings, we first come to the highlight the zero line. I have this on because it provides a neutral reference point on the CVD indicator. So it allows you to see whether participation is net positive or net negative relative to the start of the session. Next, we select compact for the price range to prevent any extreme moves from distorting the scale of the CVD indicator. And here you see for the indicator range, we use session range rather than chart range. So the CVD resets consistently with each trading session instead of scaling dynamically based on a zoom level. So this keeps the data stable and comparable from session to session. And at this stage, we are not yet interpreting divergences or forming conclusions from CVD just yet. We will get there. We will do that in later modules. But right now, we are just simply training the eye to recognize what net aggression looks like when presented cleanly. As you can see here, you can also filter out volume sizes on CVD as well, but I do not have these settings enabled. Also, it's important to make sure your reference point is set to reset daily at the crypto market open. Now, if you have your chart time settings set correctly, this action should already be set up. Now, you may need to click or enable the session start feature here. If it's not displayed already, you may add the reference point by clicking on the add button here and setting that up. Next, we look at volume bars. Volume bars aggregate executed trades within short dynamic intervals and color them according to the dominant aggressor side. I like to choose the solid display option. It's just a personal preference based on clarity. So I keep the bar width at 15, as you see here at the top, which is just representing the width of each volume bar at the bottom here. Now, the most important setting here is choosing volume delta rather than total volume because imbalances matter more than participation alone. We want to be able to see which side is dominating. Now, if you already hit the apply to bars within the volume bubble settings, the clustering setting should already be applied here. But the idea here is to match the same clustering from the volume bubbles to the volume bars. Next, we have volume imbalance, which you can see here displayed at the top right corner. Now, volume imbalance displays the ratio between aggressive buying and aggressive selling across a defined range. It does not really generate any type of signal or predict reversals. It's just providing us context about whether aggression during that segment of time was balanced or decisively one-sided. This becomes more meaningful later when we layer it with liquidity, but for now, just simply reflects directional pressure intensity. There are no settings for this, so all that part is simple. So in the next lesson, we will examine the passive liquidity tools inside Bookmap so that you can understand how to view both sides of the auction.